remains optimistic on FY27, guiding for a double-digit revenue growth and better margins. My colleague Ashesha spoke with Mohit Malhotra, who's the CEO of Dabur India, to understand the roadmap ahead. Let's go across and listen in to what he had to say.
Overall, the results have been very positive, looking at the backdrop of a very dynamic macroeconomic volatile environment in West Asia, which was characterized by high inflation, freight issues, supply chain disturbances. I think Dabur has done pretty well, 10.6% revenue growth, backed by domestic growth of almost 10%, 9.5% in the FMCG business, backed by volume growth of 5%, despite taking up price increases of around 4.5%, which came in, inflation of around 6%. Our international business growth has been 15.5%. Middle East, despite war, has grown by 8.6% in INR terms. All our international markets have actually grown by high double-digit growth. So I think the performance all round has been secularly excellent in my view. And we were a little bit impacted by unseasonal rains in the month of April, which impacted our beverage and glucose business. But for April, in May, again, the beverages and glucose have also come back with mid-teens kind of growth. So beverage is also back on track. So overall, pretty happy with the performance, and that's on the top line. As far as the bottom line is concerned, on bottom line also we got accretive bottom line, 15% growth on profitability. Our gross margins have actually expanded by 100 bips in the India business, and overall operating profit is expanded by around 30 bips for us. And the PAT expansion is also there. So all round, I think it's a good performance from any stretch. And it's pretty much in line with our business targets that we've taken as a team of a double-digit growth. So I think it's a good beginning start to the whole year. And the first quarter is to my satisfaction. Thank you.
Okay, so the first quarter has come in line with your expectations and it's a good start to the year. That's the word coming in. But Mr. Malhotra, we'll talk about the price hikes and the revenue target that you've shared. But before that, let's talk about the international business. Most of those businesses have reported very strong growth. Bangladesh, I was just going through the growth numbers, 34%, with Europe reporting about 28% growth. What led to this solid uptick in your international business, and how much of this is sustainable for the next few quarters?
So we expect the full year international business in a double-digit trajectory because Middle East situation was quite volatile and which disrupted our supply chain also from the Middle East. And that's why we had to double down on all other businesses which were dollar denominated, also whether it's US or it's a UK business. So all around, I think it's the team has done a great job. I think the brands have done well. Our advertising expenses have actually moved up ahead of the revenue. So 15% is what we've invested on advertising as compared to a 10% growth. E-commerce has been one of the big pivots of growth in international business also. Now contribution around 3 to 4%, which was almost zero last year. So I think that's come up very well. Our Namaste business has grown by around 17%. So it was dollar denominated business when you translate to Indian currency. Because Indian currency depreciated, there's been a translation gain also in international business for us. And that's what has driven the international business. A lot of innovations also happened in international business. For us, overall, I think a good trajectory of growth and which is seemingly sustainable for the whole year. And we expect a double-digit international business growth. Yeah.
Okay, double-digit international business growth is sustainable for the rest of this year and for the full year FY27. Mr. Malhotra, let's also talk about the consolidated revenue growth guidance that you've reiterated this time around of double-digit growth for FY27 versus FY26. How much of this will be volume-driven and how much of it will be led by value growth? Can you break it up for us?
It's very difficult to give you exact guidance on the breakup, but I think in the FMCG market, any polarized driving growth is not very good. It has to be both a mix of volume and also value. So now there is a mix coming in because of the inflation. We've taken price increases of 4.5% in the last quarter, and we might have to take another round of price increases. The South Asia war doesn't ebb. So it's a good thing that part is coming out of volume and part is coming out of price. So I expect it to be a 50-50 kind of a thing between volume and the price mix. But it all depends upon what kind of inflation headwinds that we expect. Like in the first quarter, we saw around consolidated inflation of 8%, with India inflation being 6% and international inflation being 12%. In the coming quarter, we are expecting this inflation to actually peak at around 20%. So we might have to take another round of price increase because the brands are so resilient and most of the brands are market leaders in their respective categories. We are able to pass on the price, the inflationary impact to the consumer also. And the impact has got softened. The inflation and the price increase impact got softened because all the prices are lower than the pre-GST levels. Because in the GST, the prices went down because GST rates got down from 18% to around 5%. So there was price cuts which actually happened. So still we are at the lower levels of the pre-GST prices. So that is kind of working in our favor, and the brands are resilient and leadership is there. So we are able to pass on the benefit to the consumers, pass on the price increase, the cost increases to the consumers.
Mr. Malhotra, you did tell us that you have passed on some impact and you took about 4 to 4.5% of price hike in the last quarter. If you can put some numbers into perspective, how much have raw material prices risen by? 4.5% being passed on. What is the balance impact which either the company is bearing or it is likely to be passed on going forward? Can you give the breakup of numbers for us?
See, the total inflation has been around 6%, like I told you. 4.5% has been the price increase, and cost efficiencies and cost-cutting measures have also contributed. We've cut a lot of trade duplication, unnecessary consumer promotions have been cut. Cost optimization has actually happened across the value chain in the organization. So 6% inflation and 4.5% and rest 2.5% is actually coming out of cost efficiencies in the company across the value chain. And therefore, you find operating margins actually moving up and gross margins also moving up by around 100 bips. So that's the kind of math, how it's actually broken up.
All right, so that was the Dabur CEO speaking to us on ET Now, talking about the results as well as other things. But we slip into a very short break on the other side.